Okay, I've started to record.
So my question is, there are some pairs that I think somebody told me like, oh, some USD JPY is going up, this one is going down. If this one is going down, this one is going up. Basically it helps with, let's say if I'm just trading only 4 pairs, let's assume now. I don't know which 4 pairs you think like, oh, if you are buying this, you are selling this. No matter what, like it will just make your analysis a bit, your bias easy. So let's say I do an analysis. Let's assume JPY is buying, and then there is another pair I'm also trading. No matter what, you would never buy it because when JPY is buying, this one is supposed to sell. So instead of you to try and rush a trade, you just chill and wait till your sell happens. Like basically it's like an extra edge knowing that these 2 pairs, when one goes one way, this other one goes the other way, just like DSY and Bitcoin. Let's use that one as an example now. Everybody knows that when DSY is buying, Bitcoin is selling. When DSY is selling, Bitcoin is buying. It's just general knowledge. So which Forex pairs that one will be able to just put on a watch list? Like, okay, let's say you want to be consistent, and definitely you have to narrow down your focus on just 1 or 2 or 3 or 4, so that at least you would have a pair to actually trade every time or analyze or try to look for entries. But you just know whenever you click buy on this particular pair, this next one, you are never buying both of them at the same time. One has to be buy, one has to be sell. So probably we as newbies could actually start from there to have that bias in mind first before we now start dabbling into other, bigger or more volatile pairs that might, give us issue. But then we'll be able to be consistent in this particular 1, 2, 3, 4. I mean, let's just be 4, just only 4. Week in, week out should be the only pairs we are trading. You could start with that.
I understand what you're saying. I understand what you're saying, but the problem with that is you get lost in the whole correlation thing. Okay, so it will now be a battle between the buys and the sells. So you must be buying one and you must be selling the other. Whereas it's not supposed to be so. You have to treat each pair as a different entity. All right. There are sometimes you will have a 70% correlation or 80% correlation, but both currencies are still going the same way. Take, for example, AUD USD, or take, for example, USD CHF and US 30. All right. You guys can hear me clearly, yes?
Yes, we are following.
Okay. So take, for example, for example, we have the right thing. You see USD CHF dropping, yes?
Yes.
There is a very strong correlation between the US dollar and the US 30. All right, between the dollar and the stock market, there's a very strong correlation. The dollar can be going up. If the dollar is going up, it means the stock market is going down. If the stock market is going up, it means the dollar is going down. So let me quickly explain that. When dollar is going up, it means people are taking money away from you. You do know that dollar is a safe haven. So when the dollar is going up, people are taking their money away from the stock market and putting it into the dollar or the other safe haven, gold, Japanese yen, Swiss franc. All right. So if dollar is going up, US 30 is going down. If US 30 is going up, dollar is going down. So for US 30 to go up, it means people are taking their money from their bank account, which is in dollar, and putting it into the stock market, which is buying shares and whatnot. So there is always a strong correlation between the dollar, a negative correlation actually, between the dollar and the US 30, the US stock market. But now look at yesterday, we had the dollar dropping strong. If you had that in mind, then you'd be like, yes, dollar is strong and dollar is going down. It means US 30 has to go up, which is ideally what is supposed to be, what is supposed to mean. But if we go on US 30, we would see that US 30 was dropping around the same time the dollar was dropping. So let me which one? Okay, look at it. The dollar, this is the US 30. Look at the time, 14 o'clock was dropping, dropping, dropping. You see it, right? Money Magnet, are you there?
Yeah, I'm here. I'm listening. I'm here.
Yeah. You see from 14 o'clock to 16 o'clock, which is from 2, 2, 3, 4. From 2 to 2 o'clock to 4 o'clock, the US 30 was dropping, and the same time the US dollar was dropping also. So 14, 15, 16. All right. So you see it, right? That is where you have a slight problem when it comes to buying one and selling the other, because it gets to a point, and it gets to a point in price, or it gets to a point in the market where both of them would move together. Okay, so if they start moving,
One more
yeah,
question. Sorry. I know what you're trying to say. Like, we shouldn't just like, oh, this one is buying, then let me just look for sales. We should
yeah,
still follow our strategy, our trading, what do you call it, like trading setup. Like, oh, you
yeah,
still before you click buy or sell. Yes, it's the bias is just to give you an edge. But if you don't see, let's say one is buying, the other one is supposed to sell, and your entry is bearish, engulfing, break and retest and all that, and you do not see it, you won't just go and click sell because the other one is buying. You know,
yeah. I
I don't
know,
know if
but some people might
so
not think that way. Some people might not
so
think that way.
yeah,
So that's why.
it's just to like the basically just what do you call it? It's just like an added stuff before you take trade. Like, oh, I'm buying this one, or this one is buying and I missed the trade, so I'm going to sell this one.
Yeah,
But then I will just draw a zone, and then I will wait for confirmation, candlestick, and whatever rejection in that zone. Draw Fibonacci if you are using Fibonacci, and then when everything adds up, I sell. But I'm not just going to sell because this other one is buying. I think basically that's just the long and
yeah,
short you're trying to tell
yeah.
us.
So to answer your question, simple: AUD, USD, USD, CHF. It's as simple as that. That's what I trade. That's what I trade. So that's what I trade. So if one is buying, one is selling. If one is consolidating, one is either buying or selling. So you can do that. For me, I use AUD, USD, and USD, CHF. I do US 30 once in a while. So that's it. So for the most part, all through last week, I was bouncing in and out of US 30, and it don't tire me. So I'm back to Forex. So to answer your question, AUD, USD, USD, CHF, they are
Okay.
the two pairs that have the strongest negative correlation. So if you are buying one, you're selling the other. But I treat each pair as an entity of its own. So it's not necessary. It's not paramount that I take the two at once. I hope you did that.
Understand. Thanks a lot.
Yeah, man.
So you can proceed.
Yes, sir. This class, I don't really get a lot to talk. I want you guys to ask questions and see how I can help, either psychology, technical analysis, or whatnot. Anywhere you feel that you have problem. Yep.
Okay, good evening.
Yeah. Good evening.
Okay, yeah, my name is Mali.
Okay.
Yeah, and first of all, I want to really appreciate you. I do follow your chat breakdowns that you drop every now and then on YouTube, and
Oh,
it's very, very insightful and very helpful.
thank you.
Uh, yeah. So, I've been trading for a while now, for like more than 2 years or more than 2 years
Okay.
now, actually, and I've been I've been seeing some growths, yeah, here and there, but my problem is this my trading style, yeah,
Mm.
is good
Yeah.
or it's advisable, or I was advised to tweak my trading style as in it's always advisable to tweak until you find a spot that is profitable.
Okay.
Yeah, I have, and I found a spot that is quite profitable for me. But when I
Okay.
do get like series of um, losing streak, I
Yes.
tend to tweak it and then tweak it far back, and then it will now be as if I'm not jumping to an entire different strategy when I look at it with perspective, and I'll be like,
Mm.
oh, like I've tweaked this thing too far, like it's not so different from how
Yeah.
was trading before. So it's not like I'm jumping from one strategy to another. Whereas if I just stick with that strategy and just ride that losing streak, I
Yes.
would have been profitable. So it's like I'm kind of like, stuck in that phase right
Phase.
now. Yeah,
Yes.
yeah. So I
Okay.
don't really think
Uh
I can get advice.
that for that it comes to few things. One, it's psychological. It's not all right. One thing I tell people um is to know the type of person you are. All right. You might be a great trader trading the wrong pair. Okay.
Yeah, yeah,
You can be a very good trader, but you are trading the wrong pair. So you have to know the kind of person you are. If you are the fast type of person, then stick to fast currencies or fast instruments. If you are the slow type of person, stick to the slow instruments. All right. And if you encounter losses, one thing you should know is no strategy is bad. All right. You don't have to tweak the strategy. You just have to tweak um, how you see the market. All right. And I'll break that down. Let's say, what strategy do you trade? Mali.
Hello, yeah, yeah. Sorry, kind of my phone
Yeah.
was
What
off. I'm
strategy
here.
do you trade?
I trade with the trend. I follow the trend, correlate the
Is
trend
it is it
before.
price action, or you are one of the SMC niggas?
No, 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 no. Price action. I don't know any answer. So
All
price
right.
action.
So if you are the
And
price action type of person, let's say
yeah,
let's say you start to encounter losses after a certain period of time. All you have to do now is go back, check what happened, check the price action, check what caused the losses. Was it your patience? Were you impatient? Were you seeing reasons as to why to leave the trade, but you totally ignored it? Uh, were you seeing a lot of exhaustions? Now you're not tweaking the strategy. you are tweaking the way you see the market. Example, I took some losses last week. Where was it? Where was it? Where was it? Okay. I took some losses last week. Let me show you guys that one. Yeah, USD CHF M30. During my chat breakdown, I was talking about this level. Price was around this level that period. During my chart breakdown, price was around here. Are you following me?
Yes, we are following you.
Yeah, price was around here during my chart breakdown, and I was saying this level was looking like it has broken. I had reasons as to why I wanted to buy that market, why I bought the market. All right. And I had a stop loss below this level here. Okay. Was it below here or below here? Yeah, below area of fluctuation. I had it below this area of fluctuation. The market was around here. The moment the market started to push back down, it hit me. It took me out. Yeah. Now, my strategy was not wrong. I was seeing reasons as to why to close the trade, but I did not. One of those reasons was all this exhaustion on top of the candles. I was seeing those exhaustion, but I did not want to accept that the market had buyer's exhaustion. Okay? After I touched my L, that was when I now recognized that, man, I don't use God. I was supposed to not hold that trade for long for it to hit my stop loss because the market was already giving me exhaustions. All right. So when you start to encounter losses, you learn from them. You don't tweak your strategy. And since you are doing price action, the price will always tell you what it's doing. Another example is did I take any loss yesterday? No, I didn't. Yes, I did on US 30. All right. On US 30, I took one kind of disgusting loss yesterday. It was around this level. All right. So I kept seeing the market giving higher lows, higher lows, higher lows. Yes. Are you following me? Is Mali here? He's not here. Let me continue. I kept seeing the market giving higher lows, and higher lows. Yeah. But as of this moment, the market was failing to break this point here. Yeah, it was failing to break this whole point here. What was it? Yeah, this line here. It was failing to break this point here, but I was still looking at taking the buy because of all these higher lows I was seeing. But what I failed to see was there was some type of break on the lower time frame. All right, price action was telling me that this whole level here had been broken. Now, my strategy is not wrong. It's just me not seeing things clearly. So when you encounter series of losses, the ideal thing to do is not to tweak your strategy as long as market conditions have not changed. then there is no need to tweak your strategy. What you have to tweak is how you see the market. And how do you see the market? How do you tweak that? You get to look at how the candlestick painted during that period. All right. This period here, you see that there was no clear break of this level on the M5. On the M15, there was series of spikes to that level that went back to close inside the whole level. That alone has given you another insight to say when next I see that thing, I will do so and so. All right. And to be honest, I was looking at selling. I sold in the morning I sold this around here. I sold this with my stop loss above that point. But when I started to see the higher lows painting, I closed the sell and I took a buy. And the sell, I had a TP1 here. If I had held it, it would have gone there. But as it turns out to be, I no hold on. I can't go buy. It touched my SL, and you can see how that fares. But regardless of whatever happens, you have to understand that the strategy is not wrong. It's just the way that you see the market. And as long as market conditions have not changed, you will know when market condition changes. Right now, we are dealing, the whole economy, the whole world is dealing with inflation and the pending recession, and Russia and Ukraine war is going on. So that is the market environment as of this moment. So you don't have to tweak your strategy as of right now until the market environment changes to something else. All right. And when it changes from what we have now to something else, then you'd have to adjust it. That's when you have to adjust. But as of right now, you don't have to tweak your strategy anyhow just because you took losses. All right.
I have a question.
Yeah.
So now, this is a very clear example. I think I've asked this question before, but if you look at this using price action, break, retest of structure, and then taking a buy, I can't pinpoint it, but you are seeing it there. Now, you just actually highlighted why you bought. It's very clear. It has broken this previous level and then retest, and then it's going up. Now, there are sometimes you will be in a position to buy. You don't know whether to buy or sell. So let's say you look at a higher time frame. You are looking at a break and retest, a correction to a particular level. Now, look at a lower time frame. It's showing a double top, and then it has broken the particular neckline and gone back to retest. Now, how would you know which one to use? Is it the lower time frame on that it's selling, which is, I think your example is a clear case of what happened.
I always go for the higher time frame. All right.
Okay.
Always go for the higher time frame. I was buying because the higher time frame was showing me buy.
Yes, look at it. Yes, break and retest. Yeah.
Yeah, but why I wanted to sell was because after this impulsive move, the market was going to go into a point of consolidation, and that consolidation is just bouncing between highs and lows, highs and lows. That is the reason. There was no technical reason for me selling, but there was a technical reason for me to take a buy. All right. So regardless of whether I was selling or I was doing this, the higher time frame holds precedence. So I was buying because the higher time frame was bullish. All right. So the higher time frame will always take precedence. If you see a buy on the higher time frame and you see a sell on the lower time frame, the lower time frame can just be If you get a clear indication to sell in the lower time frame, it will just be some type of a scalp or intraday setup, but not the overall move. All right. So facts. Out here, I had a TP1 here. Yes, because it
Yes,
was
yes.
an intraday move I was looking out for. It was an intraday move, just um, quick 300 to 200 points movements, which is 20 pips, 20 pips, 30 pips move. So I was not looking to hold for long. So if you see a buy on higher time frame and you see a sell on lower time frame, the buy holds precedence, but that sell you should take it. If you see the indication, the confirmation to sell, but understand your higher level, your higher time frame levels. All right, because those points are going to be where you see some type of rejections. All right, look at this. We had a pulse in the market here. We have a level where the market broke from. You see a lot of action around here. So, which is why I was looking at, okay, if I held that sell, I would be holding it to this level. But overall, the market would be a bullish move. So I would always want to look at taking the overall setup for longer. So if I'm taking a sell on lower time frame, I won't be holding it for long. So I don't lose sight of the overall buyers. I hope you understand me.
Yes, boss. I do. It's very, very clear. Higher time
Yeah,
frame takes place to lower time frame, no matter what. Then
exactly.
one more thing. I noticed, how do we, like, let's say you analyze on a 4 hour, like you are buying and maybe break out or break and retest. How do you go to a lower time frame, like the 5 minutes, to
Mm.
probably use flag pattern, double top, double whatever to enter a particular trade, like so that you can enter early. So from, let's say there's this rejection on your EMA now on that yeah, there, yeah, good, yes. Now, how do you go to a lower time frame? Let's assume you as a person now, you know that okay, you are going to buy from there if it gets rejected from the EMA. So how do you
Yeah.
go to lower time frame now to say, okay, this is a zone I'm going to watch out for and I'm going to buy from here? So how do you go to a lower time frame after circling it out, and what do you look out for? Do you still look out for double top, double bottom, or bullish engulfing on the lower time frame, or you only just look out for rejection? Because I know on the 5 minutes, it might be showing sell there, say, but meanwhile you want to buy from there. So I don't really know. What do you look out for?
Unfortunately, I did not hold the buy I took here because of CPI. Joel was with me here at home that day. Um, Unfortunately, I did not hold the buy for long. But this is how I'll break it down for you. There's something called exhaustion. All right. There's something called transition. All right. So on this time frame, you see a lot of weeks going on around here, right?
I can see them.
Yeah. So all you have to do is box those points off. Okay. Box them off. Box them like this. Me, I have an indicator where a rectangle that I named exhaustion. It makes me go. So this is H4. I go on H1. I want to see what price is doing around this whole level here. Now, I don't care how price got to that level. As long as I'm seeing rejection, I want to go on lower time frame and see what price is really doing around that level. All right. Now, looking at it from this point, what do we see? We see the market has started to give, this is a low, this is some type of higher low, and the wicks have started to give higher lows. It says on the most tiny time frame, there is higher low painting. It means that the bulls are coming back into this market slowly and slowly. So what you have to do is keep on looking and look for transition. All right. Like I said, exhaustion, then transition. When you mark out your points of exhaustion, you go on lower time frame to look for points of transition. All you are looking out for is where you see a point where the market changed from selling pressure to buying pressure. Okay, that gives you an early entry into this market. Okay, now looking at it like this, the first point of transition becomes here. Okay, the market was giving higher lows, lower highs, lower highs. Then we got the market break that level. Market broke that level. Then we started to see lows being held. Okay, lows are being held. Lows, lows, lows. I can't remember where I entered this trade, but I left the trade early because of the CPI. I think it was around here or around inside here. So regardless of that, after you spot your exhaustion, go to look for an area of transition. You don't necessarily have to see double bottoms or double tops or whatnot. All you have to see is a point where the market changed from a selling pressure
Hello?
Can you guys hear me?
Yeah, we can hear you now.
Okay, where on our yes last?
Hey, change
Waiting
from selling.
Oh, okay. Yeah, I said where you change from selling pressure to buying pressure. So let me show you another example. Okay. Um, let's use which one should we use? Let's use this point here. Or no, let's use something else. Let's use this point here where you see this one. All right. Ideally, you know it's going down. This market is going down, yes?
Yes.
Then you get a point where you know that it don't break, Abby.
Sure, yeah.
If you are the Fibonacci type of person, you can pull out your fib, yeah? True or false?
True.
You are waiting for a rejection from PRZ levels, yeah?
You're correct.
All right. So let's say this market. Let me change. Let me change my Wi-Fi. Glo and Airtel, they won't send me go back trenches. Let me change my network. Can you guys hear me?
Yeah, we can hear you.
Okay. I'm trying to change my network from my Wi-Fi to my phone because I don't know what's in they do Glo for a while now. They've been having bad Can you guys hear me?
Yes, we can hear you.
Okay. Can you guys see the screen? Can you guys see the screen? Okay. All right. So you mark this point off. Now, when I say mark the point off, I meant mark it before this one happened. Okay. This was a Friday. This was it was a Wednesday. Inside. All right. So you mark this off. You go on lower time frame, say H1, just to see how that market is painting around that level. All right. What you are looking for is a transition from a selling pressure to a buying pressure. All right. Look at it. You're having selling pressure all around this point. Yes.
Yes. I'm following.
Let's keep breaking it down. It will keep getting far, but we will be fine. It can be like saying an Airtel network can was pass. Because what is this? What is this devil of a network? Now,
I cannot hear you.
We can't hear you.
how about now? Can you guys hear me now?
Yeah, we can hear you.
Oh Jesus! I just talk since I don't know say now no be hear me. You salubwa. All right. Okay, so like I was saying, like I was talking to myself where I don't know say I no dey hear. There was no reason as to why to take a buy here, even though we saw the exhaustion there. Even though we saw exhaustions here, there was no good reason as to why we should take a buy there. Even though later it can't give that reason, but it did not give a valid reason. But if you go on lower time frame and check this point here or this point here, you would see some type of exhaustion and transition. Let's use this point first and push straight down to M5. Where was it? They don't allow me go lower. Why they not allow me go lower? What's really going on? My village people, now follow me reach here. Okay, so on this time frame, on this 15 minutes time frame, you would see that the market rejected from here. That tiny point that we painted, I wish this market, this trading view will give me chance to go M5. You would see that there was a spike here that closed bearish, but on the M5, that would give you some type of bearish push and a bullish push in that market that would signify some sort of rejection from here, and you'd see some type of transition from a selling pressure to a buying pressure just by looking at this wick here. I don't know why allow me go that M5. But if we want to stick with that, if we want to stick with this time frame as the minimum, you'd see a transition here. Okay, you'd see that transition here.
Yeah.
Where
it.
Hello, you see it?
See it.
Okay, so the transition was here. You can see it. Even though give you double bottom or whatever chart pattern you look for, you could still see what you needed. And what is it? Exhaustion. You wanted to see exhaustion. You want to see the market tell you that the sellers are exhausted in this market. So that's why you see a lot of this. Even if you had an entry up here and your stop loss below here, your stop loss still was not hit. This is 27. This is 06. Let's say you have your stop loss, you had your entry at 29.270 and your stop loss at 29.03, or let's just say 29,000. That is a 29 pip stop loss, and you'd see that the market gave you, this is, let's say you had your stop loss at 29,000 and your entry was at 29.27. You see that the market went, give or take, 33 pips. You had a 27 pip stop loss. The market went 33 pips for you before it started to consolidate. All right. So give or take 1:1, you still knock 1:1 for there. And when the market came back to this level on that H4, it was a very massive spike. Was a massive spike. So how do you capitalize from this spike? This spike alone. How do you capitalize from it? Once you mark out your point of exhaustion, before you mark points of exhaustion, make sure to know that the market is moving in a certain direction. So you should not just go and be drawing exhaustion anyhow. All right. Example, I wouldn't just go and be drawing exhaustion on this top here. because I see exhaustion. No, I wouldn't go and draw exhaustion from here because I see exhaustion. No, I would not do that. All right. Where I would mark exhaustion is where I see that the market is going in a certain direction. All right. As of this moment here, market broke. We expect a higher low or a PRZ bounce. Then that is where I'll look for exhaustions before I go look for transitions. I hope you understand as I speak plenty English. The English too much.
Yeah.
English too much for me at that time. The English too plenty. I not go school. So so that is basically it. Right? Where you see the market moving in a certain direction, then you draw exhaustions. All right. Now I won't who be that one? Eric. Man, take your voice.
Something quickly, sorry.
What's
Can you hear me?
Yeah, they hear you.
Okay. You're saying you only use exhaustions when you are looking for a reversal in the market. Is that what you're saying?
Yeah, something like that.
Okay.
Yeah. Example. Another example is this. You see a break of this point here, right? A break. Another form of higher low here. You see all these points. All these points here tell a story on the lower time frame. They tell you that price is failing to break. All right. Price has a level that it is failing to break. It might just turn out to be this level. Might just turn out to be this level here. All right. Might turn out to be that level. So all you have to do is go down, and look for points of transition. So you see, this level is holding, regardless of this bearish candlestick painting. All right. For that level to hold, and if you had that exhaustion, the only reason you are going to take a sell is if there was a very strong bearish candle closing beyond that point of exhaustion. If there was no strong bearish candlestick closing beyond that point of exhaustion, you are still bullish because there has been a transition from a selling pressure to a buying pressure, and a level is still holding. So anything you get, any bullish signal you get, is a reason to take buys. All right. So this is something people call, what did they call it? Descending triangle. And with the way they say they trade descending triangles, they want to see break of neckline or whatever. But low is still holding. Now you see a bullish, one bullish engulfing, another bullish engulfing, and another bullish engulfing, telling you that the buyers are strong in this market. You might want to be stubborn and say you want to wait for a break of this level. You got that one bullish candle, a bearish candle, and another bullish candle. If you want to risk that, you had your entry here. I teach some of my students this 1, 2, 3 candlestick. Can have a 10 pip stop loss, or if you want to risk more, you can have your stop loss below structure and the market pushes higher. All right. So if you are the type of person that take minimal stop losses, you could have your stop loss below that level. Or if you want to take more risk, you can have your stop loss below or outside areas of fluctuation, which is what I usually tell traders or people that normally always have your stop loss outside areas of fluctuation. So you can either do that and while all that one depends, this is what it looks like on the 4 hour. You got inside this area here, inside this candle before it even closes. All right, so you got into that trade even inside here before this candle closes. So that is it. It gives you extra confirmation as to take a trade, hold the trade, and whatnot. So as long as you understand the points to drop that point of exhaustion, then you can work your way down to lower time frame, which is time frame correlation. So you work your way from higher time frames and you push it down to lower time frames. All right. Any other person get question? Do you guys get what I just talked about, or I just speak plenty English?
We understand. I understand it. Thank you.
Understand? Like, you are making us be in control of whatever happens, just looking at price. Exhaustion just gives us bias, but then we already have what to do or a confirmation in our head. So you don't just because it's exhausting, it could still exhaust and still go in that direction of exhaustion. Which is why I wait for a particular, like for breakout traders, they draw a trend line, break of trend line, or three candles close bullish engulfing, whichever one, but it just gives you an idea. It makes it easy for you to know the direction that the market is going. I think there is one example there. I can't pick it here, but on this your screen, there's a particular support. I think that there was exhaustion at the bottom, but it still went down. That there. You see, now one would be expecting to sell because of this exhaustion, to buy because of this exhaustion there, but it just went up and came down. But this is a clear, with your trend line there, it's a clear case of a break of that trend line. It goes up and it comes down. So basically, I'll be expecting to sell here anyway, even though I'm seeing exhaustion there. So I would have taken a, because of that bearish engulfing candle there, I would have sold. If I so it's not every exhaustion you take. I think that's basically reiterating what you already said. So which is why we need to have let's just say something in mind, like to do for a particular zone, because you don't just treat the candles them because you see a candle that's rejecting here, and meanwhile you're already waiting for a break and retest of a particular region, and then you see exhaustion, you want to change mind to buy. Doesn't really work that way.
Yeah. True.
Mine is not like a question, or it's just more of like contribution. I think to say fast, since we are beginner traders, I'm a beginner. I believe most of us here are also beginners. I don't know if there are pros here too, but we shouldn't focus on catching reversals. We should just focus on trading with the trend. I think it's more profitable that way. So,
and which is what I said. Points of exhaustions that you are drawing shouldn't be on reversals. Look to take points of exhaustions, draw points of exhaustions that are mainly for the overall trend. All right. So don't look to counter trend trade or whatnot. Look to take trades that are in line with the overall trend. So that is it. Yeah, that is basically what I talked about in the exhaustion. So for now, no focus on catching all those buys in a selling market or sells in a buying market. Wait for points of exhaustion, points of transition, and see where the market understand that the market is going overall in this direction. Then you follow through with it.
Yeah. So basically, point of exhaustion is just like the end of a counter trend, the end of a retracement to continue the main trend.
Yep. Yes, it is. And it's subjective. It's not set in stone that it has to be 4 hour or anything. It can be the daily time frame. There are some trades I took. You see this line here, you see this rectangle here. That alone tells you that the point of exhaustion was from the weekly. See it. The point of exhaustion was from the weekly. It's not even from daily or 4 hour. It is from the weekly, and it's from the weekly I broke everything down for me to start to look for sales in this market. All right. That point of exhaustion was seen here. You get higher lows, higher lows, higher lows, some type of higher low or higher low here. You get the break of that most recent higher low. You get a retest or 100% retracement of the initial push. Then you get this whole level failing to break. This whole level failing to break up here. If you see how this crosshair is, that whole level was failing to break with these two candles. You get another push inside. All of those just they paint the exhaustion way the markets they give. If you want to do more I too know, then you can mark this point here and drop down to maybe 30 minutes and see how that area was painting. You would still see what I am talking about. You'd still see higher lows, and a point where the market transitioned from a bullish pressure to a selling pressure. And you could get an entry down here with your stop loss above here, and you are good to go. SMC niggas go call that trade one of their life. So everybody there.
You beef them.
I know they beef them, I just dey greet them.
One question: How low do you go?
I go very low, very petty.
No. It's a different question. How?
Yeah, I know. I
When
go as
saying,
low as 1 minute. If
sir,
I go as low as 1 minute, also.
I wanted to say when taking this 1 to 3 candle setup, how low do you go? Do you use 1 minute candle?
Do I wait what?
Do you use 1 minute time frame too for your 1 to 3 candle setup?
No, I do 5 minutes, 15 minutes, 30 minutes. I'm skeptical about 5 minutes, but sometimes when I see a clear indication that the market is ready to move, then I take from 5 minutes. I don't have to wait for 15 minutes or 30 minutes.
That's because he's a pro and he has had years of experience. So.
Yeah.
Yeah.
Yeah. So, but you have to understand that there are different there are different nuances as to how to take certain trades of that 1 to 3 pattern. So you might see a nice 1 to 3 pattern on the 15 minutes, but on the 30 minutes, it's telling you that it's not yet ready. So you have to take 1 to 3 patterns that align with at least 3 or 4 time frames, and not just take 1 to 3 candles because you see it paint on the M5.
Get that. Thank you.
Yep.
Okay. I have a question.
Yep.
Does trading section influence when you take a trade? Well, I mean, like if you see your pattern or everything align, and it's not yet a trading section. This trading section has not yet opened. Do you take the trade or do you wait for the session to open?
Well, it depends on what I'm trading. But and the time I'm trading. For me, anything from 6 p.m. Nigerian time, I don't take trades. So whether the thing like me form, na papa go form be that one. But if 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 I'm trading US 30, for example, US 30 moves well when the New York Stock Exchange opens. All right.
Yeah.
But if I see signals during London, bruh, I'm taking it. Even if it go hold me, if you give me like 20 pips, if you give me like 15 pips, if you give me like 30 pips before New York open, I'll take that and wait for New York spike to spike, then I come back into the market. If it's AU, I trade the bastard anytime. And I just don't take trades between 6 p.m. and 10 p.m. But anytime after that, they take the papa, regardless of session or whatnot. As long as there is a pattern, I'm taking it.
Okay, thank you.
Yep. Anything else? This class has been going on for 1 hour, 12 minutes. So I'll be uploading it on the YouTube. Many niggas no Congo tire for the class. But you guys ask questions. Let's run it down for another 15 minutes. By 10:30, we can end the class. So you guys ask your questions.
Questions, so ask.
Nah, that's cool. If there is no question, we should just end that like that. So.
Okay, let me just ask this one.
Okay.
Like, what's your risk management plan? Like, I don't know the things like.
Everybody different, but for me, I don't go. For US 30, I don't go above 160 points, which is 16 pips stop loss. I don't go above 16 pips stop loss. For Forex, I don't go above 30, 35 pip stop losses. So I can take 25 pip stop loss, can take 15 pip stop loss, can take 30 to 35, but anything above that, I don't take the trade. If body still they push me to take the trade, I reduce my lot size. Simple. That's my own risk.
Okay, do you have daily loss limits? Like, there's a particular loss you take in a day?
If I lose 50 pips a day, that day I stop trading.
Okay.
Yeah.
Thank you.
I deal with pips for the most part. I don't deal with the dollar will come. Dollar will come regardless, but deal with the pips. 30 pips can give me $30, can also give me $3,000, can also give me $3, can also give me $3 million. So focus on the pips. So if I lose 50 pips, I'm gone. And I have my risk management is next to being stingy. All right. I don't like to lose. So example, I can have a $20,000 account and I'm only willing to lose $300 a day. And I can make more than $300 a day. I can have a bad week and the most I lose that week is $400, $500 on a $20,000 account. Yeah, sometimes before I lose a lot. I lose a lot, normal. So, but now I have a very stupid and disgusting risk management pattern. So now I don't lose as much as I'm supposed to lose, and I make more than I'm supposed to make. So that's it. So it takes time. It takes time, but
Okay.
Hello,
you
boss.
walk around it. Yep.
I have a question. My own is just it's not much.
Okay. Okay.
As beginners, like
If you speak Pidgin, if he hook you,
no issue
yeah.
that as
Yeah.
beginners, like how many pip in a day or in a week as a beginner your target should be?
I do tell people don't not to pressure yourself, but 50 pips a day, 250 pips a week is a good thing. You don't have to go 1,000 pips a week. You don't have to do
Okay.
500 pips a week. You can do 50 pips a day, 250 pips a week. Do that
Okay.
consecutively for 4 weeks, and you have 100% of whatever you have, whatever capital you have. It's as simple as that. 1,000 pips gives you 100% of your account balance if you trade it the right way. So you have $100, 1,000 pips is $100. It takes 1,000 pips to blow your account if you have a very good risk management. And if you have a risk of 50 pips a day, it means it's going to take more than 2 months for you to lose your whole more than a month or 2 months for you to lose your whole account if you have proper risk management. So that is it. You can do 50 pips a day. You can do. Don't be tired. Don't be tired. Don't be greedy. Uh, don't be. Don't do long throws. If the market gives you 300 pips in a day, collect them. Walk away. If it takes 700 pips from you, collect them. Walk away. It gives you 10,000 pips, collect them, walk away. So there's no net to it. There is no safety net to it aside your 50 pips a day L. But you should keep getting 50 pips a day profits at least, or if you can still do 20 pips or 30 pips a day, don't pressure yourself. Just do what you can do. Uh, no tell yourself, say the market must give me 50 pips. Nah, the market can decide to give you only 20 pips. If now 20 pips to give you that day, collect and walk away. So don't pressure yourself too much for that. All right?
Okay, bro.
Yep, yep. Anything else?
How do you leverage? Like, how do you add more positions on the trade, or you don't do that? Like, where people, I see where people enter 10 positions in one trade. Like, how when
The, those people are psychos. They are psychopaths. Yeah. So I always say, why give, why allow your account take a lot of hits when you can just have one position and scaling? There's a difference between scaling in and stacking. This is what stacking is. You have like 5 positions inside here. Hold on. You have like 5 positions inside here. You have another 5 position inside here. Have another 5 position inside here. Have another 5 position inside here. When you are not a bastard, but you can just bundle all those 5 positions and put them into one. Instead of having 0.1, you can have one position with 0.5. It gives your account enough room to breathe, and it gives you the opportunity to scale in. Scaling in, you have one entry here, you have another entry here, you have another entry here. All right, you have another entry here. So that is what scaling in is. So that is a topic for another day. It's very broad, but basically that is how you scale in. Don't allow, give your give your account enough room to breathe. All right, give your account enough room to breathe. Don't just stack orders or scaling. So you are risking your profits. You are not risking your account balance. If you are risking your profits, let's say you have one entry here. When the market goes down, you are risking this profits the market has given you. When the market goes down, you are risking this whole profit the market has given you. When the market goes down, you are risking this whole profit the market has given you, as against having like 10 positions here, risking the whole account there, having another one, risking the whole everything there. Bruh, don't be a bastard. Bundle all those positions into one position and give your account enough room to breathe. Simple stuff. Yeah. So that the whole scaling in type thing is a broad topic that we can't even talk about now. But that is it. You'd have to understand how price move, what is your entry technique for scaling in, what is your confirmation checklist for holding a trade or closing a trade or adding more positions. So it has a lot of things in it. All right.
Final question. It's basically mental stuff. Like everything you've spoken, like I've literally watched your videos, recordings, and all that. I've watched like 1,000 times, and I'm not exaggerating. But when it comes to executing, I do execute, and then I don't know whether to leave the trade or stay. You know, I could be in a trade, and then I'll be like, let me use pips now. 30 pips, 40 pips profit, and then I will be like, no, it's still gonna go down, it's still gonna, and then before you know it, it will retrace back up my entire stuff. So basically, I need this mental conditioning. Like, guy, when you enter a trade, if it gives you, let's say, 50 pips, take it and leave, and come back again to trade, not just wishing like, oh, I wish I had stayed in the trade, it would have done 100 pips. Oh, why did I leave early? Why did I leave late? You know, like basically, I already, most times I make profit, but I always give the pips back to the market, like literally. Now, sometimes it might even go to hit my stop loss or hit my, maybe I'm trying. So at what point would you know when to like, okay, this is my target for the day, and let me just hit it and I'm done, literally, not waiting and hoping.
That
Because
one is a personal thing.
okay.
When it comes to that, that's the only point where you bring in the dollar factor in it. Take for example, you are holding the trade, and the trade is running at $1,000 profit. You as a person, if as a person you don't see yourself as someone making $1,000 a day, that is where you tell yourself, bruh, how many times I don't make $1,000 a day? Man, fuck this shit. Close the trade. Bam. Whether I like go more, whether I like go less, that one no concern you. You don't add $1,000. There are some times you tell yourself, how many times have they make $500 a day? How many times have they make 30 pips a day? I'll tell you this. Many people cannot make 10 pips a day. All right? So if you are making 20 pips a day, 30 pips a day, bruh, take that 20 pips, walk the fuck away, and come back the next day. Rome was not built in a day. You don't have to tell yourself that I must make 100 today. All right? Just have targets, have the end in, have the final place in mind. If it goes there, alhamdulillah. If it not go there, have an exit strategy. All right? And my own exit strategy has been fine-tuned as time they go by. Before I say break of 38.2, then I said a good exhaustion level. Right now, I'm like, just fuck it. If I see anything where I don't like, I'll just close the trade. All right, because it's good. You have to cut yourself some slack. anybody, no be everybody fit make wetin you dey make. So if you are currently floating 20 pips and your take profit is 50 pips, if your mind no allow you, want make you, like, your mind dey do you somehow, I don't know how to tell you speak the English, but if your mind dey tell you one kind, say, you no fit hold this trade for longer, close the fucking trade and walk away, come back the next day. If the trade like may hit your take profit and keep going, bruh, you have taken your profit, you have walked away. Everybody to each his own, but you don't collect your share of the $6.3 trillion for that day. You don't back up, you don't carry your accounts, you don't make profit that day. All right. So that is it. You should have an exit strategy. You should have you should lose the greed effect. You should have the gratitude mindset, and that those things will help you in the long run. All right.
Yeah.
When you say gratitude mindset, which is there any stuff we need to listen to every day, or music we need to play, or everything I'm talking about is mental, because if you don't really have the mental stuff, nothing happens. So somebody asked the question about there's a particular time of the session that you take trades. Now, I work, like I'm really busy. Let me just be open. And basically, I might just draw zones and all that and hope that it gets there. Maybe by the time I come back, it has passed or it has rejected, it has gone ahead, and I might want to like rush to trade and all that stuff. So basically, before you go in like 1-2 minutes, when you, assuming you see a trade, you are expecting it to go down, what do you do? Do you just see a bearish engulfing on the 4-hour, or you see it on a lower time frame, and from there you set the trigger and put 30 pip whatever 30 pip stop loss? Because I know 30 pip stop loss is not really possible for GJ pairs except you go to lower time frames, because if you use higher time frames, that means you are looking at 80 pip stop loss and all that. So do you say, oh, GJ is going to buy, so you scale down to 5-15 minutes before you take any trade, whether buy or sell? Is that what you do?
Yes, that's for me because I'm a full-time trader. But if you're not a full-time trader and you have things that will take your time away from the market, then you have to expose yourself to a lot of risk, a lot of stop losses, and lower lot size. So you can just have a level where you expect, let's say, for example, I say, oh, this market they drop, this market they drop. I want to see if this market will reject this level here. I want to see if the market will reject this level. Bam, just draw level. Draw the level like this. Drag to the future. Drag it to the future and say, my buy limit will be here. My stop loss will be here. If it comes, it comes. It's a far level. There is a level here. Okay, if the market starts buying, it might get to this level. I'll just box that point off. If it gets to that level, it should put me in, and my stop loss is above blah blah blah. But if by the time the market now gets there, you are now chanced to look at the market, it no go bad, may you just go on lower time frame, and it won't take up to 3 minutes of your time. Go on lower time frame, see what is doing, what is happening. Is there an exhaustion? Is there a transition? Who the fuck is that, Eric? Is there an exhaustion? Is there a transition? What is really going on? All of those, you can do that within 3 minutes. If now only 5 minutes you get to look at charts, now only 2 minutes you get to look at the chart. You can look at it. You can see areas of exhaustion, areas of transition, points of pause in the market, break of structure, chart patterns, this, that. You can literally see it. Then you make your decision if you want to use a 30 pip stop loss or a 80 pip stop loss. Boom, do go back to work. Allow the market do what the market knows how to do. So you're not too serious like that. If you are the busy type of person, you are swinging, yeah. Yeah, so that's it. Thank you guys for jumping on this. Jumping on this.
Thank you.
It was recorded. I'll see how many gig Telegram don't dash me. So I'll upload it to the YouTube channel this night and or tomorrow morning, so you guys can watch it again and again and again. So this class, the recording is 1 hour 22 minutes long. All right. So thank you guys for coming on this class. I want you guys to please be reactive. They react to my post. Ask your questions on the YouTube.
Okay.
Ask me questions on Twitter, on IG, everywhere, anywhere you can, and I'll be glad to answer your questions. All right. So thank you guys for coming on. I'll see you guys in the next one. All right.
All right. Thank you very much.